Hey everyone, Steve here from theturtlefollower.com with your stock market outlook video for the week of September 21st, 2015. We're here Saturday morning taking a look at the S&P Futures. And you can see we've talked about this before in the past, but we are ultimately in this very large range in the S&P. We talked about 1992 being a key area and then also 1830. So anything that happens really in this larger box I think is just another form of consolidation. But what we do have to take notice of here is the fact that we have been trending higher almost in what they call a bull flag or a rising wedge. It could be an ascending triangle. There's so many different ways you can look at this, but ultimately you can see we've been following this trend line, and Friday we came right to that trend line, bounced a little bit and closed right on it. So key point in the market now I think is the next couple days, Monday, Tuesday. Do we hold this level? Do we try and break out again over 1992? We had that breakout on Thursday, when the Fed announced that they weren't going to cut rates again. So at one point it did look like we were breaking out. We're all the way up at 2012, and then sure enough closed below it, okay, putting in a reversal candle called a Gravestone Doji, basically meaning that it looks like buyers were exhausted, bears taking over, sellers taking over, and then we had the follow through. So it's a 3-day pattern that initiates that reversal signal. It's not just the one day. All right, so what it is you have your move up. All right, then you have your continuation and breakout, which ultimately fails. So this is the actual Gravestone Doji, but it's confirmed on the following day when you break the low of that Gravestone Doji. Just again, a 3-day pattern for candlesticks. You guys can take a look at that. Google it and you'll see exactly what I mean. There's also one called a shooting star or a hammer, which is the exact opposite. So with that said, being that we had this right at resistance at this 1992, had this pullback, all right, I'm thinking that we probably continue lower this week. All right, I know a couple people on Twitter, specifically Ryan Dietrich, put out that I think the next 3 weeks are some of the worst weeks that from a seasonality standpoint. So it wouldn't surprise me to get back down to 1900 or so. 1830 always a possibility. I still think we retest that at some point. I don't know if it all happens this week, but I think we just move towards it this coming week. But from right here with this pattern, this rising trend line that probably gets broken, I just think this week we're looking at a sideways to lower week. As far as the Nasdaq goes, okay, Nasdaq, a little bit different situation in that we did get the breakout, all right, back over that 43.36. It did close there for a couple days, but ultimately Friday's action brought us lower. So here you go with that rising trend line, and you can see that we are somewhat breaking that trend line. All right, so here again, we've talked about it in the past, but looking at this as a potential AB pattern where we have a follow through. All right, so you would say A and then to B if we're considering this to be the high. So AB, all right, so from 45.67 down to 39.07, and then if we're considering this to be the intermediate high, then essentially you get the same amount of points to the downside, and that completes your ABCD pattern. And what that says is we probably go back down to this 37.66 or so, 3900. But again, here you can see we have intermediate levels in between. All right, we also have this trend line now coming in from the top. All right, so we got a lot of conflicting patterns here that are happening, and it really just makes the water very murky. So here again, I just consider this as a potential rollover point. It looks like we're starting I would look for some support right around 41.36, and if that doesn't hold, then we're probably heading back to 3900. The Dow, similar situation. All right, just didn't have that big move up, came right up to support 16,800. All right, another reversal signal, follow through. All right, trend line broken, new trend line in place. All right, to the downside. All right, so you can see that these patterns actually mean something. All right, this area here, it was the perfect point for short sellers to step in. It was 16,815, and it was the downtrend. All right, so you just look at it from a technical perspective. It's amazing how the technicals always seem to line up when you kind of look back at things. So here again, I would say 15,800 is an area that we probably should hold. If not, we'll probably see 15,500. And the Russell, which always seems to outperform a little bit on Fridays, but again, here's your downtrend line, here's your uptrend line. All right, we're still above the uptrend line for now. This 1167 is a key area. If you're a pullback trader and you trade basically swing trades, I would say you probably could have shorts in all three of these. And you could look at the IWM, the SPY, the triple Qs, the diamonds, and probably go ahead and have a short position on with a stop right here around 1190. And with a stop in all of them right above Thursday's high. I think those potentially are key swing points that if we break back above them, then we're probably headed much higher. But if you wanted to go ahead and define your risk, you're talking about risking about 30 points here on the Russell. And if we look at it in the IWM, you're talking about 115.72 with a stop with the high here is call it 119. But you have the same exact pattern. So if you guys are looking to get short on some of these stocks, instead of shorting individual stocks and you want to short the index, you can do that too. And you can just see here. All right, here's that same pattern. That looks like we're just potentially going to break down below. I would probably wait for more of a confirmation breakdown below the trend line just to initiate. But again, that's a trade you can look at going forward. Again, here you go with the SPY. All right, there's one there, and you could say right in here 203 would be a stop. The diamonds, DIA. Okay, here's your trend line to the downside. Here's your potential swing point, 169.50, and here's your breakdown of a trend line. All right, so diamonds you can get short. The Qs probably are the strongest out of all of them. All right, still above that trend line, similar to the Russell. But again, here's your trend line to the downside. So essentially, you could look at these as key areas. And when I say swing low, or it's actually a swing high, that basically is that point right there, all right, on all of these charts. So if I wanted to go ahead, I would say I'm short the Qs, and my stop's going to be right there over 108, because if I now break out over 108, then it validates this downtrend line that I think we're under. All right, but again, that's just another way to look at it instead of shorting individual stocks. If you want some short exposure, there's even the ultra shorts that you can actually get long the vehicle, I guess you can say, along the ETF, whatever it ends up being. So like there's SQQ, there's SDS. I'm not sure the other ones, but those are actually short funds, but you purchase to the long side, if that makes any sense. So again, those are just a couple different ways to look at things. And again, if you're in a long only portfolio, you might want to look at potentially hedging your bets here and putting on some exposure to the short side just as protection, because I do think that this week we ultimately head lower. And so from there, we'll see how it plays out. We'll talk to you next week. Members, head on over to tonight's strategy session. We're going to go over the portfolio and 5 new short trades that we have in play for Monday morning. All right, have a great rest of the weekend, guys. Take care.